Kite crashes 40% despite an upbit listing, as 1.16 billion in liquidations wipe out 162,000 traders. But here's the thing. The real story isn't just one failed pump or one hack. It's crypto's great catalyst collapse, where positive news becomes bearish signals and battle-tested protocols harbor fatal flaws. I'm about to show you exactly why this separates defensive positioning from catastrophic losses. I'm Alex. 4 brutal realities demanding attention right now. Kite plunges from 11 cents to 7 cents within hours of its Korean exchange debut. A 40% crash on traditionally bullish news. Balancer bleeds $128 million across 7 blockchains through an access control flaw. 11 audits, 4 years live, and it was still vulnerable. 1.08 billion in long positions were eliminated as the Fed's hawkish pivot dampened December rate cut odds to 69.3%. 191 million in institutional ETF outflows as fear sentiment hits 38.63. Translation: when exchange listings trigger crashes and audited protocols get drained, good news has become exit liquidity. Connect these catalyst failure dots that prove positive news is poison. Kite secures an upbit listing, historically a massive Korean market catalyst. It sees trading volume surge 390 million, up 222,000%. Market response? An immediate 40% collapse. This isn't random volatility. This is systematic catalyst rejection. When fear dominates at 38.63, traditionally bullish events invert into bearish signals. The exchange listing provides scared holders exit liquidity rather than attracting new buyers. But here's what makes this different from typical dumps. Kite also landed Binance and Coinbase listings simultaneously. Triple exchange convergence, and it still crashes. The catalyst effectiveness has completely broken down. Meanwhile, 1.16 billion in forced liquidations eliminate 162,000 traders. That's not market correction. That's leverage destruction. Long positions suffer 1.08 billion in losses. Ethereum longs alone bleed 273 million. Bitcoin longs lose 298 million. The over-leveraged unwind creates artificial selling pressure that overwhelms even legitimate positive developments. The physics of deleveraging trumps fundamentals. Then Balancer teaches crypto's harshest security lesson. 4 years live, 11 separate audits, millions in security review costs. Considered battle-tested infrastructure, it gets drained for $128 million through faulty access control. The Manage User Balance function bypasses sender validation. Attackers systematically drain pools across Ethereum, Base, Polygon, Arbitrum, Optimism, Sonic, and Barachain. 7 blockchains compromised simultaneously. 6,590 WETH, 6,851 OSETH, and 4,260 WSTETH were stolen. 27 forked protocols face 78 million in identical vulnerability exposure. This isn't an isolated failure. This is systematic infrastructure risk across composable DeFi. Barachain's response reveals the severity. Validators execute an emergency network halt and a hard fork to protect $12 million in user funds. When proven protocols force network shutdowns, the assumption that audits equal safety dies. XUSD stablecoin depegs 23% amid continued fallout. Staked Stream USD loses dollar parity. The security crisis spreads beyond the initial breach into interconnected stability mechanisms. Quick hits you need to track. The Fed's hawkishness dampens December rate cut probability to 69.3%. Institutional flows reverse. 191 million in ETF outflows signal professional retreat. The long-short ratio hits 0.73. Shorts are dominating. Funding rates are deeply negative despite being positive yesterday. Market structure is flipping bearish. BTC dominance is 60.3%. ETH dominance is 13.1%. The privacy sector surges 7.3%, as ZEC and Dash capture surveillance resistance flows. 129 billion in aggregate open interest, 284 million in 24-hour liquidations, on top of the 1.16 billion cascade. Smart money is positioning defensively, while retail watches positive catalysts fail spectacularly. The meta-narrative crystallizes with brutal clarity. Kite's triple exchange crash proves positive catalysts can be powerless against fear-driven liquidation spirals. Balancer's 11 audit failure exposes systematic security assumptions crumbling. 162,000 traders were eliminated as over-leveraged positions unwind, regardless of fundamentals. Are you positioned defensively for continued catalyst rejection and infrastructure failures? Or still betting on exchange listings and audit certifications while smart money waits for the leverage flush to complete before re-entering risk assets? Subscribe for your next pulse in 12 hours. Like and comment your biggest catalyst failure takeaway. I'm Alex. The reality check intensifies. Stay sharp out there.